Welcome back to another episode of Market Skycast, the official podcast of Blue Sky Trading. Now, before we get started, if you haven't heard me say this before, we are running a ridiculous sale on our 50K launch plans. Welcome 26 is the code. 50% off, get started trading for as little as $30. $30 is absolutely absurd. And then in addition to that, we also offer live trading and lessons in our Discord every day. The president, Mike Tolbert, making stupid money every week. And then we have Coach Matt, Coach Becky, and Coach Riz here, all streaming in front of you, all giving their ideas and even taking some live trades to make you some money, get you funded, and get that sweet, sweet payout. Now, NVIDIA earnings was last week, and we made some predictions. We thought we were going to break out. We thought it was going to be the catalyst to get us out of this range. And then, the day after, we're kind of right back in it. Now, Mr. Earnings, I got to talk to you. Give us the data, give us the numbers, and what did you think of the report and the guidance?
A couple things. Number one, I think NVIDIA is judged by a standard that no company in the history of mankind has been judged by from an earnings perspective. Every company in the world would literally kill to have these types of numbers, quite frankly. But then again, when you're the number one market cap stock, you're the number one stock in the AI universe, you're the catalyst of everything, and everybody's eyes are on you, those expectations are through the roof. And I'll say that I felt like NVIDIA on the fundamental side of the equation, when you're looking at their raw earnings expectations and what they came through with, I felt it was a rockstar report. I really did. I feel like every single metric that we look at on NVIDIA is better today than it was before this earnings print, quite frankly. And so sometimes I think we can judge the downward pressure and price on earnings, but earnings can be pretty chaotic every now and then, especially when you're dealing with NVIDIA. And NVIDIA has that pattern as well, where on earnings releases, gap up, sell down. It's happened 3 consecutive times now, gap up, sell down. And so I'm very interested in seeing how NVIDIA kind of performs from here, especially if we increase support against the backdrop of this neutrality. I still believe NVIDIA can provide that catalyst, quite frankly. Because when you look at the raw numbers here, Justin and the team, NVIDIA comes out with a 162 handle against a 153 expectation. That's a 6% beat against EPS. Revenue was a very positive story year over year, 73% increase in revenue year over year. Just an absolute ridiculous number. Profit margin was in the mid 60s, gross margin in the mid 70s. I mean, these are just numbers you just have never ever seen, quite frankly, from a company that's as large as NVIDIA, and it's just quite impressive, actually. EPS, a very positive story. Revenue, a very positive story. You go down to guidance. Guidance came in at 8% increase in guidance here for the first quarter. Guidance was increased on the EPS side of the equation as well. Just as I said last week, I felt like guidance was going to increase somewhere around the 5-6% range, 7-8%. I
Through
don't
the
know about
roof.
you, but that's pretty damn
Yeah.
good. I call that a hat trick. When you beat on EPS, you beat on revenue, you beat on guidance, you pull off the hat trick, and that's kind of where it starts with NVIDIA. But profit margins, gross margins, really, really good. Secondary numbers coming out of, say, their networking business. Networking was up 250% growth year over year, guys. Like 250% growth year over year. And obviously, NVIDIA is all about the data center build out and the AI infrastructure build out. And they didn't disappoint there. On the GPU infrastructure build out, you had, I think it was 75% growth year over year. Also, data center build out represents 91% of their growth. And when I was looking at the growth out of that 91% growth out of their data center, 50% of that is based on what the hyperscalers are doing. 50% of that is based on everybody else. And that shows us that we are broadening outside of just the hyperscalers. This is not just a hyperscaler. The build out's real. It's getting big, and growth metrics and demand equations are through the roof. And so, from an overall earnings environment, I felt like Jensen pulled off a great report, and I don't think you can say a negative thing about the actual report itself. The price response, we can have a different conversation on, but from the fundamental side of the equation, I don't know. Let me just put it like this. This is the last thing I'll say on it. When you look at EPS and fundamentals tell a story over time. People keep telling me how expensive NVIDIA is. And yet, price is flatlining and EPS goes from 105 to 130 to 162 over a 6-month time period. You're talking about 60% growth in EPS. Price is going flat. What do you think's happening to valuation in that? Valuation is coming down. NVIDIA post response has a PEG ratio under zero point 0.5. That is ridiculous cheap when it comes to the fundamental backdrop. And so I just felt like it was a great fundamental story. Now let's see if the technicals can support a leg here.
You know, these numbers feel like a penny stock numbers coming out where they're just year over year, month over month increase. Like if you tell me 75% increase or 70 in what the last 3 months or whatever, that's
It's
just absolutely insane.
yeah, their growth metrics are out of this world right now.
Yeah. I see a headline like that, it's just a click the buy button. Why not? And that leads me into my next question, and this is for you, Riz. You know, we saw price climb when the earnings came out, and the next day it kind of went right back down. Do you see any reason why that was? Do you think it was, profit taking, stop hunting, or just a mix of everything?
I think it's a mix of everything right now. There's so much uncertainty in the markets right now. And that's one thing we're emphasizing to traders on a daily basis within the streams is they should be taking profits on these trades. The market is very volatile right now. So it's really important that those novice traders put those stops in the money and capture all they can because the market is being very unforgiving at this time.
Yeah, it's hard, so hard to make a swing position right now. Say you got in last night, caught the pump, you're probably red at the end of this trading session. So it's incredibly hard to do. And that's what I want to ask Becky is how are traders supposed to approach a market like this psychologically when we have these crazy numbers coming out and in my head we should be going up, but it comes right back down. How do you change your style or do you take profit quickly or what do you do in this kind of environment?
Yeah, I think you have to be super careful and very much eyes wide open kind of energy because you can't just take something for granted that you think it makes sense to have a certain move because the market doesn't always make sense. And she's going to be right. And we're going to be just trying to follow her lead, the miss market. And so I think that this was a prime example. I mean, we discussed it last week on the podcast about how strong the company NVIDIA is. And amongst all of them, she's a powerhouse. And so we would expect a bullish move from a powerhouse producing great numbers. However, like I said last week, you really want to think about how the market doesn't always give us what we think it should. And in back testing, we've seen that before too. Like Matt pointed out on the chart that it will be a strong earnings report and there will be a counter move against that. And so I am always just kind of careful to see what the data has done previously in similar situations and on guard. And for me, I felt like we had two beautifully bullish, slow trending days on Tuesday and Wednesday for New York session. And I don't know if you guys have heard this term before, but it's a type of front running. And I think that there is absolutely a situation where the market will factor in certain news ahead of time, just in anticipation, such as with federal rate hikes or pauses. And so this felt like a similar situation where we were having those bullish pushes across all the indices and NVIDIA as well. And it felt like that was in anticipation of this positive news. And so I would just say to always be defensive and always manage your risk because like, for example, I traded this. I got a SPY call contract Wednesday morning, and then I got two of them and I scaled one out at the end of the day. It was a nice bullish push in anticipation of the news. And basically that covered my risk of holding the second one overnight. So I sort of basically put myself in a risk-free trade in trading NVIDIA, but not NVIDIA directly because the direct catalyst sometimes will be more volatile. So I traded a side factored instrument that will be impacted by it, but not directly. So it'll be a little bit of a muted response, a little bit safer. And then I scaled out so that way basically I could cover the cost of if it went against me. And then sure enough, I woke up this morning in red on that second contract. So I saw the volatility at open today and I was like, not today, shut it down in a small red. So overall that trade ended slightly green, but that's an example of like, I also felt a bullish open would make so much sense. Wasn't the case. And so always just do your back testing and be defensive with your trade management is definitely my like technical read of these type of catalyst opportunities.
Yeah, that move is what they call an options killer. You see the news, you go to bed, you are nice and green, and then you wake up, where'd all my money go? And I like that you brought up front running because there's so many times where people call these, grind up days going into these events, and it's one of those, buy the rumor, sell the news, and that might have been it. So there's a lot of good points there, and I think our viewers are really going to like that.
Yeah, and can
Now
I
that
just
we
make
kind of
one more really
absolutely.
quickly, just on NVIDIA here, because I know everybody today is talking about the downward pressure in price here. I'm not surprised we're down on NVIDIA in any capacity. Like, I don't think anybody should ever have too big of an opinion on direction going into an earnings print. There's 2 days in front of an earnings and there's 2 days after an earnings that can be very misread a lot of times. You get front running gone bad and you get a volatility event, and institutions could have made this decision to dump NVIDIA 4 weeks ago and they're just using the earnings liquidity as the liquidity event. We don't know those things. What we do know is NVIDIA had an amazing fundamental earnings report. That's what we know. What we do know is software in IGV is starting to slow down on the sell side of the equation. What we do know is that if NVIDIA increases support following this release, we have a behavioral change on the chart, because the pattern on NVIDIA is 171 up to 193, 171 up to 193, 193 down to 171. So if you increase in support against the backdrop of that neutrality, I'm going to tell you right now, I'm going to front run that breakout.
Yeah, it could be a springboard just to actually finally break out. And what do we always say? You know, the reaction's not instantaneous on these news events, these earnings. The market has to digest it. You know, the big boys might be playing with us and the move finally happened. So
I
that's a
think there
great
were
point,
stop
man.
hunts today, Justin, personally.
Oh,
I think there was stop hunts
absolutely.
today.
Yeah, great point. Now, so much to digest there, but let's go ahead and get into our next section, you know, Market Watch, where we're going to actually talk about what happens next week and maybe the actual reaction from this NVIDIA news. So we'll be right back. All right, welcome back. This segment is Market Watch, where we're going to talk about earnings, geopolitical climate, and any important economic data coming out. Now, knowing you, Becky, I already know what you're going to talk about because you talk about it almost every week. So what are you looking for going into this week?
Well, it's definitely a critical part of my trade plan where I approach every week, where I look in anticipation of what news will come out from our federal government. And this week, there's a couple of smaller ones in the first part of the week. But then on Friday, we've got a couple biggies, with the highest being monthly unemployment coming out in our pre-market on Friday. And so for me, I do factor in the earlier week ones, that some of them are during New York session, some of them are before. And so I do want to pay attention to those and make sure if I'm considering a trade around those times, I'm careful. But the big one for me that I will be paying attention to is Friday morning, to see how those numbers come in this month, if they're on schedule. Hopefully they'll stay on schedule by the time that comes
Hopefully.
around. Can't always trust that. But if they do come out at that time, I would likely not be in a trade and would want to consider what that happens when that news drops, and then how that could contribute to a setup that I'll find potentially that morning. So something I always pay attention to in my trade plan setup each day. And guys, watch your backs Friday morning.
Friday morning, what is there? Like 5 or 6 red folders in the morning?
Yeah, it's a pile of them.
Yeah, so are you gonna stay away and play the reaction from that, or try to get in maybe a position front runner early? It's really early for you, I know that.
It is early. It's 5:30 a.m. for Pacific Coasters. But I will be looking anytime after, like, 5-10 minutes after the news hits. I will see potentially if it did do a nice move to a key level. Sometimes I'll get a
Right.
nice reaction around that time. So I do like to get up extra early on these bigger news days and see if there's potentially a really nice pre-market trade, because the volatility is heavier with these news days hit. And I like a little more volatility in my trade plan.
Yeah, I don't know about you, but when I see all these red folders in the morning, I want to make my money during the Sydney and Asia session and just completely sit out, let it die down, and come back in the afternoon, because that's
I'll be
not for
sleeping
me.
during the labor print itself. I'll come in for the secondary pattern.
Yeah, 100%. Now, Coach Riz, you were talking about some pretty important geopolitical events last week, like potential war, positioning of military and things like that. And, last week we had some more stuff come out, and I know you're following it closely. Do you kind of want to tell everybody about that?
Yeah, absolutely. I've been following the diplomacy going on in Geneva right now between the U.S. and Iran. It's an interesting situation because there's a lot at stake right now. The U.S. is strong arming Iran to get what they want out of Iran, which is taking the enriched uranium, destroying 2 facilities, and taking out a few other key personnel within the region. So, that's creating a lot of volatility within the crude oil space and gold. Gold is normally a hedge against crude oil. So we're seeing prices be very volatile in both of those sectors. There is also a report of Jane Street, who has a huge position in silver and has been doing some market manipulation within the Bitcoin sector, which I have a sneaking suspicion that maybe even spilling into silver. Hint, hint, since there was a sudden freeze in CME, it couldn't be a mere coincidence. But I would definitely, again, caution traders that if you guys are participating in those markets, keep your stops close. I am definitely interested in it, and I partook in some silver shorts just a couple of days ago.
Oh, wow. Now, you brought up the volatility in CL, but you mentioned gold. I don't know if you were watching last week. It was during I want to say that the Asia session where gold dropped 100 points in about 5 to 10 minutes, but indices didn't move at all. So that's such a great point. It's precious metals, like CYA on precious metals if you're going to trade them, because then at any minute, 100 points on gold is life-changing money if you're in the right direction. If you're in the wrong direction,
Also,
it's
like
also life-changing, but not in a
It's
good
life
way.
changing one way or the other on that
Yeah,
one.
but not in its. That's when you get that margin call, and that's something you don't want to happen.
I say something? This is
Yeah,
something I'm fairly familiar with. Riz mentioned Jane Street. Jane Street,
Matt, for those people that don't know what
yeah,
Jane Street is, can you kind of just say what it is?
they're a financial institution. They're not necessarily a hedge fund, which means they don't have to file a 13F. And
Okay,
That's
so
it.
so they can hide their
that's
positions, right?
That's how they're doing it.
we can say hide,
Okay.
we can say manipulate, we can say cheat, we can say
I was
let's
being
bring the
nice.
investigations on, because anytime you started manipulating the financial world, I think we should be as cutthroat as can in terms of the FO scenario. I want to
Yep.
get to the FO scenario very, very, very quickly on this, because Bitcoin has been in a tremendous downtrend for 3 consecutive months, and we're talking hundreds and hundreds of billions of dollars of retail money that's been lost along the way.
Mhm.
And they were running. Jane Street was running an algo program to basically liquidate all retail stops 10 a.m. every single day for months,
Okay.
parking that money into silver. Now, Jane Street, thank you for helping my silver position over time, but also I want to say go to XYZ, because you're also increasing volatility at such a rate in the silver market that it's becoming damn near impossible to do anything about it. And that's a lot of what's going on with Jane Street. And then the CME yesterday just comes down and shuts down trading. And they're like, oh, we're just having technical glitches. Nonsense. On the same day that we all find out that Jane Street's cheating everybody.
Convenient, right?
Like there's some things happening here. And I know that 30% down in silver that I took it heavy on that
Oh
on that
yeah.
day. And guess what? Jane Street was part of that.
Mhm.
Like I know, like Goldman Sachs is sent back being like, oh, Padawan done good on this one. But for all the rest of us, I'm like, oh, let's see that FO scenario very quickly. If there's one thing I hate more than market manipulators, I'm not sure what it is in the financial world.
I mean, it makes it so hard for retail to even participate, because you can have a great entry, great position sizing for a portfolio, and then you get a, black swan event, like we call it, 30% down in one day, and you can't do anything about it. All you can do is put your stops and do what you can do. But even I didn't do that
Trading's
personally, but can
hard
you imagine
enough.
I can't imagine the
Still.
slippage on a silver play like that.
You can't trade it in those environments.
Yeah.
The margins explode. Slippage
Mhm.
is insane. You can't be a profitable, and a lot of that is based on the levels of manipulation.
Mhm.
Trading is hard enough by itself. And then we have financial institutions on Wall Street cheating retail.
Yeah.
Like, bring it on. Let's protest this one. Bring it on. I'll sign up. I'll go carry a flag on this one.
Yeah, I'm with you, brother.
Like it drives me absolutely crazy, and I hope the long arm of the justice comes hard on this one.
Yeah, and Becky, I want to ask you with you don't trade metals, do you?
Yeah.
You do? So
Yeah.
how do you position yourself with like this crazy movement? Just stop losses, take profit, and same kind of system, just a little tighter?
Super careful. I trade micros. I trade gold. I traded silver, I think, one time, and I've traded crude, but I took a fat loss in my early year of trading, and I side eye them ever since. A little bit of PTSD on some crude oil. But I do trade gold, not uncommonly, but I trade it with micros. And I use my same technique where I'm pretty careful. Like I really want to dial in my best entry, and then I really like a scale out and a protection when I adjust my stop. So I'm just careful, recognizing that the volatility is hot right now, and it is an instrument that can be very numbers add up very quickly or detract very quickly. And so I'm just very cautious with that. I recognize what I am trading, and I'm going with eyes wide open of being very intentional if I'm going to entertain a trade, as I
It's
do with
funny.
all of my trades, but especially with the metals right now.
Yeah, it's funny. We have a couple other coaches at BluSky, and one of them I'm good friends with him, and he normally trades gold, but he saw the silver hype, hopped in, and he messaged me. He goes, "Dude, I'm down 3K as soon as I press the button," and that's what this slippage and this volatility will do to you. So take Becky's advice, play micros, or just sit out until the storm calms.
When the
Now
average daily range is 10%, it's too hot to handle.
it's
And micros
crazy.
add up fast. I'm not even gonna lie. Like when I get a
No,
micro
yeah.
profit on gold, I'm like, all right, I'm good.
Micros are moving like minis right now. I think there was one point, I think it was a few weeks ago, where the daily range on gold was higher than NQ, and it's 1/5 the size of the instrument, which
Yeah.
it should never be doing that.
Yeah. Whew.
You're talking about the
Ah.
biggest, most volatile companies in the world against the most safe haven currency in the
Exactly.
world.
It's supposed to be a
And
hedge, right?
it's crazy train stuff.
Yeah,
It is. And
absolutely.
some
Now,
of it is due
before
to
we go
what
off
these
tangent
hedge
too
funds are
much,
doing.
yeah, before we go off tangent too much, let's get into earnings, Matt. What are you looking at? I know it's not that crazy of
I
a
just
week,
want to
but we have
complain
some
about
today.
Jane Street for a second, a
I
little
know
bit.
we can do a whole episode on that.
Uh, but we'll wait to see how that one plays out a little bit. On the
Mhm.
earnings front, I mean, a lot of this week was about NVIDIA's earnings, but next week, it kind of outside of NVIDIA, it was kind of a laid back week. Yeah, you had like your Salesforces and so on and so forth, but next week opens up a little bit more, honestly, from the breadth perspective. Couple very important stocks on the AI side of the equation. Broadcom is a massively important company on the AI trade. Marvell is this secondary semiconductor on the AI trade as well. Both very, very important to the AI trade. But outside of the AI trade, on the QE side, on the cyclical side, Costco, Berkshire, like
Mhm.
these are big time
Some big names, yeah.
Buffett out of Berkshire, but Costco, Berkshire. Oh, and I forgot CrowdStrike. CrowdStrike, the most
Yeah.
important cybersecurity company next week. And cybersecurity has been under fire based on AI coming over and what, Claude announcing that next latest greatest to take over. Cybersecurity has been there as well. So there's a couple stocks, AST Space Mobile, I got a lot of interest in as well. And so there's a couple names that are like catalyst type names. I'd say Berkshire in cyclical, Costco in cyclical, Broadcom, CrowdStrike, Marvell on the AI side of the equation. But even down the list, there's a couple important names too. So I'd say there's earnings next week. I definitely agree that the macro side with the geopolitical, with what Riz was talking with Iran and Becky with labor, is probably more important next week than the earnings landscape. But you know me, I always anchor on earnings. Earnings is the truth of the market.
Mhm. I got to agree with you that in my mind, the geopolitical climate has got to be the most important because maybe NVIDIA came back down because the market's just waiting to see if there's going to be some war, right? We're basically saying we're going to take this unless you give it to us. And we put the ultimatum out there. So balls in that court, what they want to do, and let's see if
We
they
have
want
the
to play ball or
biggest
not.
military buildup since 2003 before we invaded
Which
Iran.
is which is which is absolutely crazy.
They're not small things out there. There's
Yeah,
big time
Critical
situation.
uncertainty. Like if there's
yeah,
critical
exactly.
uncertainty
Great point.
globally, like not even just like internationally, but global uncertainty and fear and concern and micromanaging all of the news outlets, like that's going to cause not a steady, nice pause, gentle climb necessarily, I
Mhm.
think.
Well, and
Yep.
you take it a step further and just think about the geopolitical climate coming into the U.S. political climate. I just watched the State of the Union address. A lot of Trump's policy from a fiscal perspective is predicated on cheap oil.
Hmm.
And if we go to war with Iran and we decide to hit those refineries out of Iran, let alone some of the other sites, you ain't getting cheap oil. Like you'll see a big time spike in oil. That's going to increase the CPI report. It's going to increase the inflationary side of the equation. Fed would have to offset that by no rate cuts coming in later this year, regardless of what happens on labor. So I do think that ultimate geopolitical risk in the Middle East is probably the most important news story that could have a lasting impact on the market next week. Far more important than whatever fake numbers we're talking about with the labor market and whatever earnings reports we're talking about next week.
Yeah, and I think people forget that this kind of stuff impacts all of the other important things that we're looking at. It's kind of a little trickle down method. So you can't just focus on one thing. You got to take everything together and formulate a plan. And the hard thing is you don't know what's going to happen. So how do you formulate a plan until you got to react? You just got to react.
I was asked today by a trader, what should I do about my energy position? I said, put a stop and hope.
Put a stop and a take profit, and hopefully one of them hits, right?
Get a stop and hope.
Yeah.
Next side.
It's
Yep. Now that's
50-50 right now.
Yeah, we just covered a lot. We got a lot going on, but I gotta agree, and I think Riz made a great point with. I think that's the Iran situation. I think is by far the most important.
Yeah, me
Now
too.
that we're done with that, let's move on to my favorite segment. Now we're changing. It's called Coach's Corner now. We decided that sounded a little bit better, so we're gonna go with that.
Okay.
I have three really, really great questions from brand new BluSky traders that have watched our couple last episodes, and they wanted to, ask brand traders questions from brand new traders, which I know I specifically had all three of these when I was starting, so we'll be right back. All right, welcome back, everybody. Welcome to Coach's Corners. These are three questions from three new BluSky members. And like I said, I've asked myself these questions. I wish I had coaches in my corner to answer these in detail and just put me on the right track. So, Becky, I'm going to start with you. And this is something that I still even think about today with everything going on. How do I know if I'm actually improving or just getting lucky sometimes?
That's a great question because it's hard to tell sometimes, especially when we're pinging back and forth between the highs and lows in our equity curve. But I think it's important to have an objective view of your trading journey. And so I think journal everything, you guys. I know that it seems not as critical as certain skills in trading. I know like backtesting in numbers and showing up and hunting strategies is important, but I would encourage you to journal your trades early on because that can start to show you trends. And you will notice what I noticed early on is when I was looking at my journal, it was like, I am trying this strategy at certain times and I'm really hitting on it. And this other one is not working. And so your literal data as a trader will guide you. It can show you where your strengths are, where your weaknesses are, what is overall over time improving and what is still staying stagnant. And maybe that's a strategy that you don't understand or isn't actually an A+ setup. And so you need to cut it or fine tune it and adjust it in a different way. And so I would definitely say to look at your own metrics in terms of how many trades, not just the P&L, because I think the P&L can be deceiving. You can have a home run day, but maybe you over leveraged and you took that trade based on listening to someone. But when your actual trade setups, how'd you get into the trade? Why, how you managed it, and what the outcome was, and if it's a repeatable strategy that you could maybe put a name on. Even naming your strategies is a powerful technique. I don't know if everyone does this, but in your journal, is it a point of control trade? Is it a mean reversion trade? Is it a trending trade? And then you can start to see actually how you are getting better. And that will ground you in data instead of just, I don't even know if I'm doing the right thing, because on a hard day, you will question yourself. I think I'm 5 years deep in trading, and on a hard day, I still experience questioning myself. So I would encourage you guys to think about your data when you are questioning yourself, and it will show you over time that you are locking down some strategies that are working for you. I think anyone who stays in the game more than 6 to 12 months, you just learn. Every trade that you take teaches you slowly, and we tend to not give ourselves enough credit for that. I think a lot of new traders don't give themselves credit for what they're learning. So this is one strategy, by looking at your literal data numbers in your journal, that can ground you in the fact that you are showing some momentum and you have certain setups that are really working for you. So I think that's what I would say, is give yourself some grace and credit and hindsight bias that you actually do understand more over time, and don't judge yourself on a red day, maybe.
You just answered everything in my follow-up question, so that was awesome. So I got another follow-up question.
Okay.
Now, if you have all this data and you have your statistics, can you sometimes look at it and just see that you're getting unlucky?
Yeah, I think that what my data will sometimes show me is that it will prove my psychological issues. That's what I have learned the most from my journaling, is that when I take a back-to-back trade, when I had a first small loss that was within my system, should have worked, was just the probability and the variance of a strategy, and I lost, My issue is if I revenge traded that or if I over traded the rest of the day. That's where you can see this isn't that I don't know how to trade. This is that I'm still pulling some BS when my emotions are a factor. And so strategically, I think that your journal can be really powerful in that regard because it can show you oftentimes that if you only trade strategically, certain setups will have a probability outcome. But it's when your emotions start to be a factor in how you're entering your trades and how many you end up taking. And if you over leverage in order to make it back faster, a lot of times that is the critical cinch point where people stay in a red P&L for many more months than they necessarily need to if those are too big of a factor in how they're engaging with the market. And so I think that that is something that you'll learn that it's maybe not unlucky, but it's more psychology issues creeping in and sabotaging you in that way. And so then you want to target your trade system management to those issues of locking into working on your technical strategies to do your best of your ability with your trade setups, but cutting yourself out of a live market when your psychology is not as stable as you'd like it to be.
Brilliant follow-up, and I put you on the spot. That was awesome.
I
Now,
like
Coach
it.
Matt, Coach Matt, I'm gonna go with you next. Now, Becky's answer could technically answer this one, but I'm sure you have something else. I feel like
So
I
can I just
understand
say
trade.
Becky answered it?
It could
I talk too
potentially be
much.
an answer. Could
That's
be
what
an
he said.
answer, but you're gonna have something else. I
All
trust
right,
you.
because I have something to add to Becky.
Ooh, good.
Oh, well, just let's hear it.
If you don't journal, I don't understand how you can learn anything.
Agreed.
Like
I think
how,
all three of you have mentioned that's one of the most important
it's
things to getting becoming a better trader.
well, and with AI platforms right now, I think it's absolutely foolish not to journal and work
Hmm
with your AI platform to evaluate the data. Like
hmm
it's so much easier
It's
to
the tool.
journal today than it was 20 years ago. When I
hmm
first started trading 20 years ago, I had to take out an Excel spreadsheet and track everything on my own accord.
hmm
I hired somebody to program an Excel spreadsheet for me just so they can do some automatic work for me. And now you got an AI platform that can do it for you in 5 minutes. Like
I mean, you can literally just pick up your phone and tell the trade,
the
tell your entries, tell
laziest
how you fell.
thing.
It'll make you a whole
You're not a
spreadsheet.
trader if you're not journaling.
Yeah.
You're a gambler in the market, and that's
hmm
fine. There's prediction markets, there's casinos, and there's financial markets you can gamble in, but that's what you're doing if you're not journaling.
That's a good point. Now, your question. I feel like I understand trading, but my results don't show it. What since you've taught so many people and you've been around so long, what usually causes the gap in that?
Time.
Yeah.
You can't force that time. Like the butt in the seat. A lot of times when I'm working with a new trader, and this is specifically to a new trader because that's where the question came from.
hmm
But when I'm working with a new trader, they have in their mind they've been sold a bill of goods on what trading can accomplish in their life. And they have this viewpoint of people they see on Twitter or Instagram or social
hmm
media on the look at me type people that are, sitting next to a private jet that isn't theirs, but they just took a picture of, or they're sitting next to some dude's Lambo in Dubai that they don't know, but they took a picture of. They're like,
Or the
look at me,
rental.
look at me, look at me, look at me, look at me. And I'm like, I don't want to look at you. But that's the philosophy that a lot of new traders have is that they can come into the market and within a short time frame they got the Lambo, they're in Dubai, they're living the high life. They see all these Bitcoin so-called millionaires on Twitter and whatnot, and they're like, "Ooh, all you got to do is go buy this X, Y, Z, and that." And they realize very quickly it's not that. It's time and seed. It's it's going through the educational process. It's learning. It's applying. There's two concepts you got to do. You have to set your butt in the seat, and you got to learn these techniques. And either one, you're going to learn them from amazing coaches like you have here, like Becky and Coach Riz and Coach Mike and yourself, Justin, and everything people are doing at BluSky and whatnot. And you're gonna learn proper techniques by watching and learning from other traders who have been in that position and went through the grind and learned how to do it and came out of it on their own. And so you're going to have to go through the learning process and you're going to have to go through the application process. And there's two things as a coach that I'm looking for with new traders, and it all starts with consistency. Are you showing up to Mike's stream daily to watch a professional trader do what he does? Are you going to Riz's stream daily to see what a professional trader does in those environments? Are you going to Becky's psychology lab and my technical lab and getting the mindset and the education you need? And so it's a two-part question. It's the application side of it plus the education side of it. The key to success is education plus application over time. You cannot shorten that journey. It does not occur. You might get lucky in your first month. It's luck. It is not skill in your first month. If you're out of the rat race in the first year, congratulations. You're one of the less than 1% of the trading population that learned how to do that. Or you can think about this long term. Put yourself on a trajectory to get to where you want to go over the next 5 to 10 years. And you sit in that seat, you learn, you apply. And so I think a lot of it is about consistency and building those habits that we need to build to be successful at anything we do. There's an old saying that you have to have 10,000 hours at something to become an expert at it. It's shocking to me that people think they can come learn how to be an expert in the number one market that is the most competitive market in the entire history of not the US, of mankind. Of mankind. This is the most hyper competitive playing field you can ever deal with. It also happens to be one of the most lucrative and generous as well if you give it the amount of time necessary to learn what makes the greats and to sit down and apply that. So I'd say consistency in both education and application. And if you're not finding the success you want, it's usually because you show up once a week instead of every day.
Yeah, great. I think time is your best friend as a trader. And you guys know how I feel about social media with trading. It's the dumbest thing you can possibly see.
Social
It's
media
not a
is turning
get
into
it's not a get
dumb,
rich.
dumb.
Yeah, it's not a get rich
Yeah.
thing. Trading is all about putting in the work and scaling properly. You don't have to work eventually if you do it properly. But if you're one of those people that wants to get the Lambo, like Matt said, or wants to, move to Miami penthouse in 2 months when you're 18 years old, those are the people that either drop out, fail, or they waste 3 years of their life. But I mean, that's what I love about BluSky is we have you guys, and I don't know if I mentioned this already, but we have coaches at nighttime as well. And there's some heavy hitters as well. So it doesn't matter what time of day you can trade. You can always find someone to help you at almost any time of the day, especially in the futures market. So I don't want to hear any new traders saying, I can't find education. I can't do this. We're giving this all out for free, guys. It's absolutely amazing. Now, last but not least, Riz, since you do the most streaming out of everybody, and sometimes you're in the middle of the day when maybe price might not be the best, how do you stop yourself from taking trades just because you're bored?
I start journaling, going back to what we were talking about just a second ago. Journaling is the most important part. The other thing I did actually today in the session was I showed traders replay. Replay is the perfect thing to do. If you guys are a trader and let's say tomorrow you get a chance to trade during the New York session and you realize it's a choppy time of the day to trade, should you be trading it? Probably not. But you can always rewind to the time that normally you're available to trade. I've some of my good friends that are really, really good traders. That's what they do on the weekends. They tune into those times of day that they're normally available, sitting at their desk. They have a few minutes before their morning starts, and they take their trades. And ideally, that's what you guys want to do as traders. You want to home in and find what patterns you can find during that time of day, because there's no sense in practicing at, every Thursday at 7 if you're never usually available to trade at 7, because the market is drastically different, and it's always changing, but at least you'll have some consistency. And the only thing that can bring consistency to the market is you as a trader.
That's a great answer. And I want to add on top of the replay function, you can use paper trading to identify maybe times that aren't ideal for you to trade. If you notice that you're paper trading, say 12 to 2 every day during lunchtime, and you're getting wrecked, just don't trade those times. Use the replay function, like Riz said. Practice the times you can trade. And that's actually great. And something I think a lot of traders forget because the futures market is open, 23 hours, 5 hours a day. You don't have to live trade all day. Study. put your butt in the chair. Education, like Matt said, replay function, journaling. All of you guys have drilled this. You don't have to. It's trading is not all about trading. There's so much that encompasses the world, and to get better, you have to kind of use every aspect of that. So, I mean, great answers, and I learn something every week just listening to you guys answer these questions. So, thank you so much for that. And that concludes this episode of Skycast. We don't have an interview this week. Next week we will. Unfortunately, Coach Becky will not be here. She has other things she has to do. So we're gonna try to fill her slot. We can't. It's not possible, but we're gonna try to fill at least the time that she's been talking. So, like I said, Coach Mike. Every morning we got education. We got psychology labs, technical analysis labs, Riz streaming. Use code WELCOME26 for 50% off your first launch plan. And until I see you next time, stay profitable.